The altcoins keep falling down and it's the longest bear market in history. Nobody believes in altcoins anymore. That's why in this video we'll discuss what's happening and why they keep on falling. The altcoin markets keep on suffering, and if you think about that itself, when it's making new lows against Bitcoin, would say that it's a good opportunity to get into them, right? That's at least how you should be investing into altcoins, and that is usually how you should be thinking in general when it comes to investing. However, the markets keep on crashing massively, and that is disturbing, that is annoying, and that's actually the longest bear market in history for altcoins in general, while Bitcoin is currently sustaining around $100,000, or it's getting close to it, and that's annoying. In the same period of time that Bitcoin went from 15K to 100K, Ethereum has basically done nothing. And the more annoying is the fact that if we go back in time and we start discussing the most famous topic of the past 8 years, which is the 4-year cycle. And I just wanted to bring it up to remind you of what we have been seeing in previous cycles at this point in time. If we go back to 2017, May 2017 to be exact, we had something that we called the alt season. The actual existence and origin of the phrase alt season came from this period 8 years ago. And that's why I brought up this chart. During this period, XRP was completely going bananas, and it had its tremendously good return for anyone that invested into XRP during that period, and it has created a massive community surrounding the token. If we go further and we go to 2021, we can see that we actually have hit the first all-time high for Bitcoin. And we've actually had most of the upwards return for almost any altcoin in the crypto markets in that cycle as well, as it was a very vertical run. So Bitcoin printed its first real high at $65,000. And it basically was the actual run of the previous cycle, which is so completely different than this cycle. Everything goes into a different manner through the cycle that we're currently experiencing. So you might want to question, is the 4-year cycle still active? Or is there something else that is more important than the 4-year cycle, making the markets go into a different direction than most of us has expected? And if we talk about the valuations of the altcoins, we're technically still in a bear market. And I believe that we're not even close to a peak of Bitcoin. I'd rather want to look at the valuation of Bitcoin versus gold instead of Bitcoin versus the dollar. Relative valuations make no sense. If you go towards the presentation that Raoul Paul did in Dubai, he basically explained that the amount of liquidity that's being added onto the global supply is increasing by 8% per year. So technically, if you want to have a return and become richer, you need to outperform 8% per year. And that makes also important sense for the fact that if you look at relative values for a certain asset, you might want to say it's expensive or cheap, but you need to benchmark it. And that's why benchmarking Bitcoin versus gold makes a lot of sense, because then you can actually see whether something that is very heavy risk on is overvalued against something that is very heavy risk off. And at this point, the valuation is still down 30% from the previous all-time high in 2021, while the previous all-time high in 2021 was a 4x of the one in 2017. So there's still a lot of upside to be gained, and it's still far away from a peak in the crypto markets, which is in a cycle where we are having every lawsuit against the crypto party or protocol is being reversed. We have a Bitcoin strategic reserve coming around as they are building the bills to actually make it work. And we have institutions in the US massively accumulating Bitcoin through the ETF, but also through investing into the private sector of crypto, which is through VC arms investing into Bitcoin layer 2s and more, or for instance, BlackRock investing into tokenization projects on top of ETH. But still, altcoins keep on falling despite all this news. And in the past quarter, altcoins kept on falling. And that is because altcoins are heavily far on the risk curve. It's a risk on appetite. And the question that is usually coming up is, what is risk on? Well, basically you have a risk curve, as you can see next to me, where on the horizontal line there's the risk percentage, and on the vertical line there's the return percentage. And the more risk you take, the higher the return can be. So basically, if you have this risk curve, if there is no risk, or basically low amount of risk, there's treasury bonds, then you have gold, then you have real estate, then you have stocks, equities, then Bitcoin, ETH, and then the altcoins. So if it is very risk of appetite, so people are not willing to take risks because they are uncertain about the future, they tend to move towards treasury bills, and they tend to move towards gold. And gold's the best representation of no liquidity and uncertainty. And that is why we've seen that gold has been going 20 and 30% year on year, showing the uncertainty in the global space through which we are not having the returns in altcoins that we wanted to see. So in the past quarter, gold has made a 25% return, while on the other hand, ETH versus Bitcoin dropped 25%. So it's the pendulum that swings both ways. And that's what you need to understand. And that's why crypto hasn't been falling based on crypto intrinsic events, but it has primarily been falling due to macroeconomic events. And that is all correlated to this chart that TechDev shared, and I keep coming back to it, which is liquidity needs to expand. And when liquidity expands in one asset, the one asset that is scarce versus the asset that is being printed more, is going to go up in number. And by having more liquidity, the business cycle is going to expand. And by having the business cycle being expanded, people will have more reserves and feel a better economy, feel it in their wallet, and then they tend to spend more onto the risk curve. So your tech stocks are going to go up, Bitcoin is going to go up, and that is also the nature when altcoins are going to go up. And when you look at the chart of TechDev, we're going to discuss this in a little bit, but we have witnessed the longest bear market in history for altcoins. And liquidity is quickly going to go up, which then also means that in the coming period, we're going to have a big run on the altcoin markets as the ISM PMI data and the business cycle are going to get better. So this is the sole reason that we haven't been moving. It has nothing to do with crypto. It has a lot to do with macroeconomic environment and all those things. And that in itself should be enough reason to not be losing faith into your portfolio and into the altcoin markets, as periods of extreme weakness are often preceding periods of great momentum upwards. Raoul Pal has mentioned that this cycle is very much comparable to the first period that Trump got in the office. And I agree with that standpoint, that I think that we're going to have a big cycle of adoption taking place, which is comparable to the run that we had in 2017. And that is going to create this dot-com bubble type of pattern. But what we also know is that we have just witnessed an extreme sell-off since Trump got into the office. And that's also comparable to the first period that Trump got into the office in 2017. A correction now, a correction then. The difference is that right now the uncertainty has accelerated. And that is what the charts are showing us, in the sense that if we look at gold, for instance, and if we zoom out a little bit, we can see that on the monthly basis, we've just witnessed an extreme run. This run is pretty much comparable to the run that we witnessed in 2010. And I think that we are in the middle of a bull cycle for commodities. And I'll come back to that in a little bit. And it's comparable to the run that we witnessed in 1980. What I wanted to show you is that we are currently having an RSI on a monthly of 86, which is the highest since the peak that we witnessed in 2020. Remember, that is before the actual bull cycle took place on the altcoins. It is comparable to the one in 2008, and it's comparable to the one in 2006. And then we go back all the way towards 1980 in terms of price pattern an RSI pattern. And if we look at the RSI on the 2-week, it is comparable to gold to the previous periods. And on the weekly, it is the same. And actually on the weekly, we are starting to print a bearish divergence on gold. So if we take a look at this, and we can see that there's such a big level of uncertainty, this expansion of gold we have not witnessed before. It's the first time that we're seeing such a strong run, pushing the valuations of crypto into a certain way. And we have been witnessing this only solely from July 2018 all the way towards September of 2020, where gold has also expanded, and that was the previous bear market on altcoins. What we also saw here is that we have a period of sideways action. So from August 2020 all the way towards November 2022, we basically stalled with the price of gold. That was the period for risk on appetite, and altcoins started to do well. So I suspect that something comparable to this, or what we witnessed in 2006, is very likely to happen. So in that case, I would not be going into a gold position right now. I'd rather be buying back around 2.2k to 2.8k. I would start accumulating more gold, assuming that we are in a bull cycle for commodities, with windows that altcoins or risk on appetite will continue to do well. Remember, we are at the end of the financial system, which means that you need to be very direct and flexible on your positions. Now, if we inverse the chart that we witnessed on gold, and we're going to look at the chart on ETH versus Bitcoin, then we can see that we are having a pretty big correction taking place on the chart in itself, which then also concludes that since we had the bottom on gold, which is in August 2022, we have witnessed the longest bear market ever on ETH versus Bitcoin. And actually against the RSI, we are currently making levels we have not seen before. If we zoom out a little bit more on the 2 weeks, we have not seen this before. On a monthly, we have not seen this before. And on a weekly, we have only seen this slightly in the previous period in 2019, which indicates that it's far overextended to the downside. And again, since we have witnessed February, the drop from 0.03 towards this level, which is basically close to 50% on ETH, has nothing to do with ETH itself. Interesting indicator is something to look at is the chart that we have here on the Chinese currency versus the dollar, and then ETH Bitcoin on top of it. There are 3 vertical lines, as you can see. We bottomed out with the Chinese renminbi here, and we bottomed out, that's the pink line, on ETH Bitcoin in the same month. The same can be found here in 2019 after a very relatively short bear market, and the same can be found here. It's on top of this line, but we bottomed out here for the Chinese currency on the 6th of April, close to a month ago. And I think in the same window, we bottomed out for ETH versus Bitcoin. And we peaked here in March 2022, and that was also the window where gold started to go up and where ETH started to go down. So it's very heavily correlated to each other, and that's why we have been keeping falling with the altcoins in general in the past few years. And if we look at that chart from TechDev, you can see that this is Bitcoin. This is the liquidity. Liquidity goes up, Bitcoin goes up. Liquidity does well, business cycle starts to follow through afterwards. And actually the peak of the business cycle is the peak of the price action of Bitcoin. And the bottom of this business cycle is where, or actually at the beginning of this bottoming period, is where the altcoins start to fire off alongside the liquidity, right? Right now we are finally, after 4 years, as you can see on the bottom here, 2021 summer, and now it's 2025 May. We are in 4 years of bear market on the altcoins, where if we look at this period, it's 2.5 years in 2016, and in 2018 it was 2 years, where we can also see that we keep on expanding those business cycles. So very likely that coming out of this bear market, the upcoming bull market is going to be longer than the previous bear market. But we see liquidity going well, PMI data is also going better, And it's very likely that in the months to come that we keep on adding those numbers and start building up confidence, that it's very likely to see that this is the reason why altcoins kept falling. And this is also the reason when altcoins are going to turn. Lower time frame based, we can see that Ether has seen a deviation beneath the lows. So we have been flipping the crucial support level at 1730 and are very likely going to expand above $2,000. We will be cheering that slight move, and from there we start an upwards trend. And the final thing that I wanted to say is that every time that altcoins are turning around, we witnessed this in 2023 with just a small move. We witnessed this in 2020 and 2021. Once they start to turn, they go vertical, and it's super hard to get in those positions. So despite the fact that you are looking at them and say they might be dead, this is actually the period that you want to get into your positions. The altcoin markets are extremely painful, and I won't be denying that I'm in the exact same boat. I've been investing into the altcoins. They're still down a lot. And I think the fact that I'm posting this to make a journey for myself and a backlog for myself to show you guys that it's just not as easy as you think it is, or it's just not as easy as you seem to see on social media, which I think is a wrong story. But I think that the lesson is that you need to stay into the game. And over time, you will start to realize that the impact of this strategy is going to be compounding effects and a pretty strong way of moving forward with some pretty big returns. And I'm not setting my own altcoin positions. I wouldn't be doing so. I see a lot of ingredients that we have, or perfect setup, that we're going to have that big run. And I've learned from the previous cycles that it can go quickly. And when that happens, you're very happy that you have been staying in your positions and that you haven't been selling during periods that you do not believe to see that actual upwards turn. So I think that we're going to see a big return in the coming period. Bear markets are not continuous. Bull markets will come. Those are cycles. Macroeconomic is getting more important, so the markets are getting more complex. But I'm not seeing any conviction at this point to be saying I'm going to quit or sell any positions or get out of the markets. I think if I'll do that, I'm going to regret that in 12 months from now. So I hope you have enjoyed this update. I'll see you again on the next one. Take care. I'll see you again. Ciao. During these markets, I'm always looking for opportunities to build my portfolio, and OKX is bringing you an opportunity. They are the first fully licensed exchange in Europe with the lowest fees. And to help you a little bit with your portfolio and to celebrate this milestone, they are giving away up to 50 euros in Bitcoin if you sign up today on the exchange. Signing up can be done within 5 minutes, and if you deposit 100 euros worth of crypto, you'll receive the first 20 euros in Bitcoin. Start rebuilding your portfolio today. Go to the link in the description or scan the QR code and enjoy up to 50 euro in Bitcoin.